Welcome back to another Stock Market Open. Today, I'm actually pretty surprised. We've got a lot of stocks that just seem to be shaking off the fact that we had a somewhat high CPI report. You've got the NASDAQ, you've got AI stocks, you've got non-AI stocks, you've got Enphase here. Many stocks that are saying, hey, you know what, we saw it. We saw your high CPI numbers. We saw that you were concerned about them, but guess what? We're not. Buy the dip. Goodbye. Mostly, I just look at, take a look at some of these here. We look at Enphase. It's up 2.7% here in pre-market. It was up 6% yesterday. Now, it was 6% the day before CPI, and then CPI, you were down 6, but again, you're up from there. Super Microcomputer, I don't know what's happening here. Just the fact that it's like up 10% day after day after day. I feel like we look at it, but this one just continues to go. Look at this. You're up almost another 5%. I feel like it's like on a daily basis that a company that'll sell you server racks just goes up. How high? Yes. Okay. Not exactly what I would call sustainable, but okay, very well. You've got here in the pre-market, you've got Super Microcomputers leading the way. CrowdStrike up 2.6, and let's take a look at BTC to see how the day is starting with BTC. JP Morgan just upgraded coin from underweight to neutral, though I have started seeing some of the suits finally start complaining that the Bitcoin ETFs might actually hurt Coinbase's revenue. It's something that I've been complaining about for a while as well, but it seems like finally some other folks are picking up on that. But despite that, JP Morgan, for example, still upgrading here. You've got NVIDIA mostly flat for the day, but let's go flip to the dark side here. What do we got? Google down about 146, NVIDIA down about 36 basis points. You did have what looked like Mr. Warren B selling some of his Apple shares. That came a bit as a surprise, since I thought usually you just don't really see Warren sell parts of his holdings. Seems like usually he's either all in or all out. But anyway, Warren Buffett's market sentiment may be negative as higher interest rates boost Berkshire's investment income. Well, yeah, you get higher rates, you're getting a risk-free, 4.5% or whatever. Q4 Berkshire stock sell-offs and position decreases far outweigh increases. It appears Buffett took advantage of weakness in Chevron and Occidental to boost those holdings. Berkshire also sold it was only about 1.1% of its Apple shares. So the company has made small moves around positions, selling 94 million shares in 2020, which Buffett later called a mistake. Yeah, well, that's what I think is so interesting, because he's sometimes he'll say, oh yeah, no, we don't trim, we just add, and we either add or sell. And so the fact that, here you've got a little bit of a selly dude law is interesting. Anyway, economic data, import prices. Oh, wow. Month over month, import prices up 0.8. The expectation was 0. Import prices ex petroleum were up 0.6. The expectation was 0. Export prices are up 0.8. The expectation was negative 0.1. So again, sort of some higher CPI related or adjacent readings here. Retail sales missed, though. Retail sales coming in at negative 0.8 versus the expectation of negative 0.2. Retail sales ex auto coming in negative 0.6 versus 0.2 expected. Ex auto gas coming in at negative 0.5 versus 0.2 expected. And control group negative 0.2, or sorry, positive, just regular 0.2 expected, and we got negative 0.4. So all of those coming in substantially slower, while at the same time import-export prices higher. Initial claims stable, 212, continuing claims 1895. Empire Manufacturing comes in at 2.4, negative 2.4, and the expectation was negative 12.5. We just got revisions. Import prices, see, that's so interesting. import prices for December were negative 1.6% year over year, and they were revised to negative 2.4%. There's some funniness going on there with those numbers for January. Like the January numbers are coming in higher, but then they're revising the other ones down around it. So somewhat interesting and bizarre. Let's quickly see how is, I don't know, quick market check, market reacting. Market doesn't really care. If anything, it's going up a bit. I'll get the retail sales report here in a moment.
Prices expected to be unchanged. We're up 0.8%. Strip out petroleum. You could see it wasn't only petroleum prices. They're still up 0.6%. Now, to be fair, on import prices month over month up 0.8, a big jump. Last month moves from unchanged to -0.7. So you can kind of see how that works out there. And if we look at year-over-year import prices, down 1.3. They've been dropping rapidly. That follows a much larger drop last month from -1.6 all the way down to -2.4. Finally, two categories left. Export prices, month over month, up 0.8. That follows a revised -0.7, washes out. And year over year, -2.4, following -3.2. That gets upgraded to -2.9. So we could see some of these prices are really starting to gain some momentum. Now, after all of that, Becky.
Okay, let's pull back. So yeah, import-export prices, again, for January did show some rise there. Here's the retail sales report, but look at this quickly. The Qs don't care. They're going up. Even interest rate sensitive is going up. NVIDIA is going up. Or what? It's like the more data we get, the market's just like, party's going, folks. You're either part of it or not. Oh, God. Monthly retail sales estimates will be revised based on 2022 retail survey, blah, blah, blah. All right. February 15th, 2024. Hey, that's today. All right. January retail sales, negative 0.8 with a revision here for December, 706. I don't know what it was. Let me look at it. Let's see here. Okay. Advanced estimates of U.S. retail and food service sales for January of 2024, adjusted for seasonal variation in the holiday and trading day differences, but not for price changes, were $700.3 billion. I don't really understand what that means. How do you adjust for seasonal variation? I guess but not price changes. You're basically saying like, hey, if last year, or like if every January prices go up 0.5%, we don't adjust for that. Okay, all right, okay, I can see that. Down 0.8%, up plus or minus 0.5% from the previous month. Okay, whatever. Total sales for November through January were up 3.1%. And November 23 to December 23 was revised up from 0.6 to up 0.4% was revised. Was revised. It didn't say revised up, just revised. Okay, whatever. So where can we get some detail? Let's see if we can get a little bit more. Yeah, here we go. This is what I like looking at. This helps me a little bit more. Those numbers are crazy. All right, this is what I like. Estimated change in monthly sales. Okay, I hate these charts, honestly. So January advance from December. Everything's negative from December, basically, except for food and drinking places. So for some reason, people are going out, eating more and having more alcohol. That one went up. Everything else appears to be negative. You've got non-star retailers, which is online, negative 0.8. Miscellaneous retailers, negative 0.3. Department stores, 0.5. Sporting goods, okay. Sporting goods, negative 0.2 there. There we go. Drop a little red on that. Oh, I did the whole line. You suck. There we go. That doesn't really matter. All right. Then we've got negative 0.2 for clothing. Well, that's not what I wanted to do. Whatever. Forget the color coding. It's all negative. Grocery stores did go up. Grocery stores up at 0.6 here. Food and beverage slightly 0.1. Furniture, I'm surprised by that, 1.5. Okay. And then otherwise everything declined compared to December. So less, which kind of makes sense. Less spending in auto in January from December, less spending in healthcare, gas stations, sporting goods, miscellaneous store retailers. Where were department stores? There, department stores. Department stores actually went up 0.5%. Macy's always wins. Okay, compared to last year. So compared to last year, we had furniture's down like 9.8 points. Electronics are down. So people are definitely spending way less than last January. Building materials, health and personal care stores, 5%. That went up. Gasoline down. Sporting goods well down. So non-store retailers, there's online. More online spending from last year. This just seems a little all over the place, frankly. I don't know how useful this is. But it gives us a little bit of an insight into retail sales. So let's try to put let's see what the suits are saying on this, because the market doesn't seem to care about this. Yields tumble after data shows shoppers spent less. Really? That's it? A negative consumption report? Well, yields back down at 420 on the 10. It's down about 6 basis points. Oh my goodness. Okay, so oh, how funny. 15 minutes ago, after a strong jobs report and similarly hot inflation report, a surprisingly resilient retail sales report is poised to take the wind out of S&P 500. Oops. We ended up getting a negative retail sales report. And it did the opposite. It boosted stocks. What a topsy-turvy world. I mean, think about it. Stocks are based on sales. People buying crap. It's supposed to be, at least. And, sorry, everyone. People are buying less. All right, pump it. It doesn't make sense. I mean, I get it. It's markets trying to price in. Okay, this is going to mean J-Pow's going to have to cut sooner. You know, it's all that nonsense. Wow. Interesting. What a roller coaster. Holy moly. Chip makers hit a record, and the semi-stock all-time highs have only stoked demand for option contracts, adding to more. Yeah. No kidding. So, yesterday, let's see here. Well, how should we do this? Oh, well, first thing we're going to do is we're going to turn Bluetooth off there. Hold on. Let's listen in here for a moment.
Also pointed out, this is a part of consumer spending. There's a much bigger chunk, which is the services. And statisticians in the government, we don't have a lot of good data on service spending. It could still be robust in that regard. Consumer sentiment has been relatively strong, at least on the rise here. So we'll watch that. But I think the Fed is comfortable right now to wait and watch. And if there's a disagreement over a springtime or a summertime rate cut, hey, we'll handle that later.
Jason, what other points of data do you watch, aside from these regular economic numbers we get? As Steve mentioned, there's not a really good way of measuring the services economy, at least in these data points that we watch. What else do you look to for clues?
You know, it gets much more difficult. Normally, I'm sorry, go on.
You guys can be Jason first and then Rick.
Okay. You know, Becky, I look at all these numbers. For me, the key is, what's going on with wages, and there's a bunch of different measures.
Boring. Okay, yeah, we get it. Wages, wages, wages. Yes, wages are positive again in terms of real wages. Yes, wage growth minus inflation. Got it. Good. That's what we want anyway. All right, so I don't know that there's really anything to make out of this. I mean, okay, so you had stronger import-export prices. I don't know if that's just the January effect again. We'll know next month if that was just the January effect. The January effect was strong last year. We'll see what happens this year. But the January effect could be what contributed to this import-export price issue. And as far as retail sales, I don't know. It seems a little depressing that everything's negative, but the stock market doesn't care. Stock market says we're going up. Quite specifically, actually, on this retail sales miss, Supermicro computer is going to go up. Supermicro goes up just because it's been going up. I mean, you can't blame that, though, from a trend basis. But boy, I don't know. Part of me is like, at what point do you just buy puts? Ironically, even with the relative strength this high, the volatility, the historic volatility is below average right now. We're sitting on the 5-day view of the, a 5-day moving average of the historic volatility. We're sitting at about 60, and it's usually between 80 and 110. So you get a little bit of a volatility break there, which is odd. But volatility is funny because if you're just going straight up, it's actually not that volatile. Because you're just going straight up. So it does, boy, it just sort of like, it makes you feel tempted to go in there and get like some, but then again, how long is it going to take? When do they, I don't know, is it earnings that's going to pull them down? It might be NVIDIA earnings. Maybe what you do, the way to play this is you'd have to just have like cojones of steel to do this. But you go over here after, well, maybe not the weeklies, but there's no monthly until March. You basically bet that NVIDIA is going to chill the rally, right? So NVIDIA earnings come in, add some like realism to expectations again. And you go in here and you buy some puts. You buy some puts for like, I don't know, the Ides of March. Yeah, that's it. Okay, so that's what, 29 days out? Problem is the theta decay, and you're going to get destroyed by how much? Let's see here. So those are the dates, 890. Let's see here. Tomato 162. It's going to cost you 90. Yeah, you're losing almost 2% a day just waiting in cost of money. So every day you wake up, it starts off -2. Imagine if a stock did that. Every day it's just -2. But the other thing that sucks is you got to have the cojones of steel for this thing being up 6% every freaking day. And then your option, being down 30% every day. So it takes some real, that's why I said cojones of steel. It's just crazy. It's just crazy time. The server rack company. Like, I get it. NVIDIA, but the server rack company. I saw a comment yesterday. Somebody's like, but Kevin, all of the non-AI servers need to become AI servers. And they were, shilling NVIDIA. And I'm thinking to myself, what are you smoking? That's incorrect. You don't have to make the old servers AI. Do you think storage servers all of a sudden need to be all AI? No. That's wrong. You just add. Yes, you add new servers that are AI. But it's crazy. There's I think there's some delusion going on, and I always get a little nervous when you start seeing that sort of delusion. Yeah. Anyway. Okay. So where were we? Let's see here. We are at end phase 374 pre-market. Chipotle is an AI stock. Yeah, I mean, everything's an AI stock, it appears. Chipotle has just crushed it. Look at this. It's incredible. It's incredible just how many stocks have done so exceptionally well. I think Even where's TSM sitting now? TSM. Yeah, look at TSM sitting at 131 pre-market, and then ASML, chip manufacturer over here. Well, equipment making manufacturer. We're gonna be at $1,000 here soon on ASML. It's crazy. I don't know. Some of it just it starts feeling like a what's it called? It starts feeling a little bit bubbly. Okay. So, towards the downside in the pre-market, just Alphabet. Let me see what the news is on Alfie. Goog. Waymo files recall of 444 vehicles. What is it going to be, a software update? Don't they own all their own Waymo vehicles? So like if you file a recall, does that mean you're just like recalling yourself? Yeah. Whatever. All right. Let's listen here for a moment.
Carlos, I'm interested in just anecdotally what you're hearing, because there's so many different components to inflation, and some seem to be going the right way, and other ones seem to be stubborn, I think. What are you hearing?
Well, top line is becoming a struggle. And I think that's sort of expected. You take up prices, it's going to take some time for consumers to get used to it. But I do hear the top line. That is the issue. And it's an important issue because what's happening is companies are sticking to their earnings targets. So if they had a 10 or 12% EPS growth, but their sales are growing at 1 or 2%, then they're just ramping up operating profit margins. Eventually, they're going to have to reset. They will have to pay for that. So that's the thing. We talked before about protect gross margins when you take pricing up. That's the first step. But now it's about EBIT and about EPS. And if you have to cut, then that's where you're going to cut from. And if you need to make earnings, no matter what, you're just narrowing the gap between gross and operating, and therefore you have less space to invest in marketing, to invest in brands. And so, it's a fast way to go from brands to a commodity status.
Carlos, we've heard, I think when Procter & Gamble was on it, the prices are, we're still seeing some increases, even though I don't know if input costs are increasing anymore. But now consumers might not be as amenable, just to say, okay, fine, I'm going to pay these prices. And I think there was a little pressure from that.
Yeah, I think that, one of the things that happened is we hadn't had inflation for a long time. Companies hadn't really taken a lot of increases. So there were some increases that were pretty dramatic, 10%, 15%. Now what I hear companies talking about potentially is let's establish a rhythm, perhaps an annual rhythm of 2%, of 3%, and then you don't have to get into, all of a sudden having to make up for several years in one price increase. And I think that has happened in some instances.
Did you see the shrinkflation speech? And I just wonder what was that? And if it ends inflation, it's whether you're getting less for the same price or getting the same amount for a higher price, it's still inflation. And I don't know who's, I guess the president doesn't think that it's his fault, or you wouldn't bring it up. If you thought it was your fault, you'd just blame it on price gouging, or it's the company's fault.
Yeah, no, I think it's there's a misunderstanding, probably a confusion, but I think that sometimes when the White House speaks about inflation, it sounds like they're expecting prices to come back down. So inflation.
Well, that's just branding. They're not actually expecting. I don't know what Biden's expecting, but I don't think any anyone actually believes that at the White House. But it's a good sales pitch, right? We're gonna fight to get prices back down. It's the perfect sales pitch for politicians. I don't think most people really understand the difference between deflation and disinflation, and it's not that hard of a concept. It's just most people aren't in finance, so it's not like a top of mind thing on a daily basis. You kind of just look at it. You're like, I don't know, man. Everything's more expensive, and I'm pissed about it. That's like these days. It's just like a relatable thing to say. By the way, it's just like you just around somebody or whatever. It's like, man, but these prices, and people are like, tell me about it. Like anywhere, everybody has that sentiment. Pretty incredible. So, yes. Biden advisor says soft landing helped by public spending boost. Well, yeah, but you're still printing money. All right, what do we got here? Late mortgage payments pile up for giant apartment lender. Oh, baby. See, this is what I'm talking about with House Hack. I say this all the time because we're literally seeing it. And it's kind of like we see it first, and then the data happens. That's a great place to be. Let me show this chart. That's very interesting. This is front page of the Wall Street Journal. Look at this. Late payments pile up for giant apartment lender. Arbor Realty Trust became a property finance powerhouse, fueling the speculative real estate frenzy in 21 and 22. That boom ended when interest rates shot up. Borrowers of a quarter of Arbor's securitized debt were late as of mid-January. A quarter? And then 9% were 30 days or more late. Holy crap. Wait. So this, this is crazy. This just represents 25% were late. 9% are just straight up 30 days delinquent. 30 days. Okay. Most borrowers who were late on January payments eventually paid, right? But 9% didn't. As of January 2023, borrowers of 0.4% were delinquent 30 days or more. Whoa, holy smokes. Up from 0.4% in Jan 23. Holy crap, that number's exploded. That's what we're seeing. Like, we're out there buying multifamily buildings right now because we're seeing so many delinquencies. We're like, this is the opposite of what you have in real estate. The pain is in multi right now, and it's crazy. Many borrowers are struggling to pay off their debt. Bloody. Arbor isn't the only one. Others have also seen a rise in delinquencies, like Money 360. Yep, commercial bridge loans have been especially vulnerable. Yep, I've seen that too. Those are like shorter term loans when they're working other projects or whatever, or renovating or something. Company generally lends up to 80%. Well, yeah, I mean, that's their problem. That's crazy. Interest rate caps have expired. See, that's interesting too. This idea, 92% of their interest rate caps will be expired by the end of 2024. Oh, write that down for a second. 92% expired by end of 2024. Holy crapolas. As hedges expire, floating rate lenders will see more losses. Right, when people stop paying. Borrowers can buy new hedges at their old interest rate, but these are now much more expensive. Duh. At that point, you may as well pay the higher interest in the first place. That's crazy. But not a surprise. So if you're looking for where the pain is in real estate, found it. Okay. Let's see what Nikki Doodla says. So I'm sure he's awake, giving us some comments on the retail sales. Wrong. He's still asleep. Oh, Nikki Toodla, how could you sleep through retail sales? It's one of the most invigorating reports there is. In other news, Japan, apparently now in a recession, fourth largest economy, as the growth in tourism spending failed to offset the sluggish domestic consumption and capital spending in Japan. GDP shrank by 0.1% in the 3 months to December, and the previous quarter contracted 0.8%. Wow. Part of that due to the inflation adjustment, given that the, let's see here. Oh, wait, no, sorry, hold on. Although the economy weakened late in the year, real GDP grew in that's all of 2023. Okay. Japan's GDP. Very interesting. Because they're trying to create inflation over there. They're having a hard time getting inflation up. It's like the opposite problem of over here. Wow. Anyway. All right. So, how are we going into the pre-market here? I don't know. Everything seems pretty stable. Yeah, it kind of does. So, some of that euphoria has dipped back a tiny bit there on the Qs. Still sitting 52.29 there on BTC. You've got Generac shaving off another 1%. But yesterday it only dropped 28 basis points. There was a period of time it had some larger droppy doodlas after its earnings. Robinhood up 13% yesterday. Things sitting at, what are we at now? 13.43. Let's drop this down. Let's see, Airbnb only dropped about 174 after earnings. So even after bad earnings, or I guess earnings, well, Airbnb earnings weren't even that bad. But even after just, earnings that weren't as exciting to the market, very little movement there to the downside. Huh.
The market, ones with great balance sheets, great return on equity, lots of cash, a low interest burden. It looks to us like the Fed's going to have to remain on hold longer than many of us expected. We think that's going to challenge companies that have high interest burdens and that need to tap the capital markets in order to grow. So those are some of the areas that we would avoid.
Emily, I want to thank you. Nice to see you, and appreciate you sharing your perspective as we're getting some of this data coming in.
Boring. Okay, I'm live. Really? Come on. Where are people? Sales, okay, here we go. Sales finally disappoint as regional Fed surveys prove useless. What? Okay, so maybe the consumer is indeed reining in a bit. January retail sales missed hard, with shrinking sales across every aggregate, including the control group. It's the weakest report since March of last year. Let's see. Meanwhile, the Empire survey bounced. Sort of erratic reading. Okay, yeah, nobody cares. Yeah, that's interesting, though. I didn't know this was the, now I do, the weakest retail sales report since March. Let's write that one down. Weakest retail sales report since March 2023. And then we do need to write down this real estate thing. This is just absolutely wild. So real estate pain, it's not, and I think people misunderstand this. Single families are so insulated with the 30-year mortgage. That doesn't mean there aren't deals to be had. It just means there are better deals to be had in multifamily because the sellers, they're screwed. They're in default. And what's crazy is it's not like you only need to wait for one person to be in default. Everyone seems to be almost late or going into default. Like, the people who bought multifamilies during the COVID boom, especially if you were in the easy-to-build, quote-unquote, landlord-friendly states, those are the ones getting reamed. I always think it's funny when people are like, oh, buying landlord-friendly states. I was looking at one in a landlord-friendly state. We were briefly in escrow on it. And they're like, oh, yeah, we got 6 evictions out of 140 units or whatever. And then I'm like, okay, got it. Like, I can handle that. It's a landlord-friendly state after all. And then we get into escrow, and I'm like, so what's the latest on your evictions? Oh, the judge threw out our case. I'm like, what? Yeah, we filled out the paperwork wrong. Oh, in a landlord-friendly state? Yeah. Okay, so where are the evictions now? Oh, we just thought you could take over. Okay. So you're telling me you had 6 evictions that you were actually in progress on, and now you just gave up, and you're going to shovel that on my plate. Yeah, no thanks. Real estate's funny game.
There are some interesting January factors, and that are usually unusual. We need to see more evidence.
Okay, so what's our next big data point coming up as we continue to try to ascertain when and if there's going to be a rate cut at some point, let's call it, before the first half of this year goes by?
Next week is going to be a big one because we get the PCE, which is the Fed's preferred gauge. And there's been this narrative after CPI this week, which was hotter than expected, that PCE will, and it has looked better. It's been a point better, doesn't have the owner's equivalent rent in there. And so that's going to be a key metric next week. Look, we still have more data today. I mean, minor data, and we have Fed speak. We have Waller speaking about the U.S. dollar later, which I think is going to be interesting. But there's a higher bar now for CPI. Carl, you mentioned that some of the trading notes are saying, okay, look, they're teeing off the Fed comments. A lot of the Fed comments post CPI and Janet Yellen, the Treasury Secretary, have been, don't make too much of one data point. Here's what Secretary Yellen said about it.
I think it is a tremendous mistake to focus on minor fluctuations and to fail to see the longer term and bigger trend. And the trend here is that inflation is moving decisively down.
So she dismissed it. We've heard other commentary. Barr was the latest yesterday, the Fed governor who gets a vote at every meeting, that he expects it to be noisy, coming down to 2%. So they're not really surprised. They're playing it down. But I do think that, Carl, the market has this nagging feeling that, especially the super core inflation number coming in at 0.7%, which was a big upside surprise, that now the market's going to need to see more proof that the Fed is really winning the battle.
Oh, no. Somebody said, get this granny out of here. No, don't say. She's what, like 35 or 36? She's 39. I don't know. She's still awesome. But anyway, so this core thing, this core surprise on CPI, remember, we looked into this. And you have to remember, let's pull it up again. It's not that easy to remember everything. You gotta write this stuff down. I'm turning into a grandpa. If Sarah Eisen's a granny, I guess I'm a grandpa. But anyway, so where's the CPI? Yeah, here. So we did these numbers yesterday. Super core was mostly vet services, vehicle insurance, and Medicare services. And if you take out the housing number, it was only, if you take out housing, vet services, vehicle insurance, and Medicare services, you're only at 0.1% on super core. So in other words, we know where the heat is concentrated. The heat is concentrated in insurance. Which, all I have to say is I have reached my maximum out of pocket. So Lauren and I are like, what do we need? That's sort of a funny thing. In case you're not familiar with that with insurance, after the Affordable Care Act, Obamacare, insurances were not allowed to have a lifetime cap. And there's now a very required, transparent maximum out-of-pocket figure. And once you hit that, that's it. Can't pay anymore. So now I get bills, and I'm like, send it to the insurance. It's great. But then again, when you just had triplets that have had some emergency surgeries. Well, one of them twice. Then you can rack that up pretty quickly. So Q's slightly reddening there, down 0.14 bips. Okay. Yields bias lower with retail sales sparking growth concerns. Okay. Leading credit data continues to be supportive for retail sales. Yeah, oops. All right, what else here? Oh, is Deere flying? Those exact thoughts are why healthcare is up. Yep, I'm sorry. It's my fault. It's my fault healthcare costs are going up. I don't know. I think we're offsetting how few people are, or how few babies people are having. It's crazy. People aren't having kids anymore. I don't know what happened. I love kids. So John Deere net income comes in at $1.75 billion. Oh, that's nice. They beat by $260 million. That's quite nice. Their fiscal year net income forecast missed 7.63-ish versus somewhere around 8. So a little bit of a miss there. Expects fleet replenishment to moderate. I don't know. How is it flying? Are you doing flying down? Because that was a miss on guide. Yeah, and then they're negative on forestry sales, negative on agriculture and turf sales. They did beat on their Q1 sales, but their EPS is lower than where it was a year ago. Let's see what's actually happening to the stock. Deere. Yeah, no, it's down like 4%. Okay, so. All right, what else here? Yeah, you got to put them to work. 4 kids. And put those kids to work. Rather spend money on what people want than make sacrifices for a family. Oh, yeah. That depresses me. I'm such a big fan for kids. But then again, I do understand the affordability's gotten insane. I work for healthcare and can barely afford 1 kid. Yeah. It's, well, you know, it's everything. It's every holiday. It's their friends' birthdays. It's, you know, taking them places like, you know, Disney, skiing, whatever. All this stuff it's just insanely expensive now. It's crazy. And it's like you can't even get a hotel anymore for less than $1,000 a night. And I'm like, I'm not doing that. I told Lauren, I go, no. She's like, oh, we want to let's take the kids somewhere for what is it, President's Day? Like not $1,000 a night again. So we found something on Airbnb that was like $380 a night. And I'm like, okay, all right, that's acceptable. But I'm like, this is crazy. It's like the principle of it. So, Kevin, I've been an electrician for 10 years now, and let's see, I really want to work for myself, but I'm nervous about having insurance and contributions to my 401k. You know, I think that's so funny that, like, those are a moat for employers, because they're not. But I always used to hear agents say that. Agents would say that too, like, well, I'm nervous about having my own E&O, and you know, who's gonna fund my retirement? Man, you get, like, first of all, you have to remember, working for yourself is a pain in the ass, because now it's like your reputation. You go from working 40 hours a week to working 80 hours a week. Most people who work for themselves make less money than if they just stayed on their salary. It's harder to qualify for real estate. Okay, so if you want to work for yourself, that's fine. But you got to realize more things are going to suck. And notice that none of the things that I listed are insurance or 401k. That's the least of your worries. The government actually gives you a tax break on your insurance. Self-employed insurance is a tax write-off. And then, you know, you could there's so many You know, you can do a SEP IRA when you're on your own, which is, I think, better than some of these other retirement plans you get. You know, you start hiring people, you can go for a simple 401. There's so many things like insurance is a joke. You pay your premium once a year. It's not a big deal. There's so many things that just don't matter. Those two things would not be stopping me at all. Anyway, good luck.
And prioritizing around themes like generative AI or preserving profitability at a time of weakened top-line growth, there's clearly still demand in the real economy for workers, and there's not a lot of evidence of mass layoffs. So these people are finding jobs, clearly. I mean, at some point, we do expect it to show up in the data. The Challenger report, which people look at as a private sector read, has shown higher layoffs, and for the first time last month, mentioned AI as a reason for companies getting more productive. So we expect to see it. It's a little bit of it's kind of confounding.
Yeah.
But clearly, people are finding jobs.
That's true, although the hiring rate, the percentage of total...
Oh, 6 months pregnant. Congrats. That's awesome. 6 months. That's cool. Druckenmiller dumped shares of Alphabet, Amazon, Broadcom while scooping up shares of beaten down gold miner. Wow. Who cares? No, I appreciate you writing that out, but like it's funny because all the fund managers they've all got to place their bets. Like I think what was it, Michael Burry? What did he just dump? I think he dumped his short on the chip sector. And he doubled down on China. Yep. Michael Burry adds to China. Wager as stock rut deepens. And he covers his bearish semiconductor wager. Well, yeah, he's going to have gotten smoked on that one. But anyway, Michael Burry, but he uses derivatives anyway, so the amount you're going to lose on that bearish bet is out of the whole portfolio is just not going to be that big of a deal. But anyway, Michael Burry added to Alibaba and JD.com. Alibaba is now Burry's top holding after they boosted their stake 50%. Yeah, what I think is so interesting about Baba, because it's so tempting on a valuation basis. It really, really is. But what I think is so tempting is that it's, or so concerning, is that you are almost exclusively betting on the Chinese consumer. And I don't know when that's going to turn around. I know it will at some point. But I don't actually know when. And that's the toughie. Let's see here. Largest drop in non-store retailers, which includes online, since November of 2022. Wow. I'll write that one down. So, largest drop in non-store retail, like online, since November of 2022. Oopsies. ehack.com. Housing market in China won't turn for years, and that's where most of the Chinese wealth is stored. Their stock market sucks. Shifting to gold to protect themselves. They should be shifting to Bitcoin. Anything Nvidia touches becomes a meme. Love in the spider jacket. Thanks. Yeah, it's actually wild how like insulative this thing is. It feels like a wetsuit. The material and it like traps heat, which is great when it's cold. Would a person who has an electrician company call it an electrician business? Well, that sounds like you're like shopping around electricians. Like, here, you can have this electrician, you can have this one. Yeah, you're right. So I guess it'd probably be more like a electrical company is usually what I always know, but then that implies utility. What do you do? I'm an electrician. What company do you work for? I don't know. Oh, that's a great GPT question. Let's fire up those AI engines. That is very interesting. What does an electrician call their business? Would it be on electrician's business? Sounds weird. Let's see what it says. Oh boy, electrical contractor. Oh, I like that. Yeah, yeah, that's a good one. Okay, well, the NVIDIA or OpenAI today doesn't have enough H100 chips, so it's just freezing right now.
The actual number is down 0.1%. A revision in the rearview mirror also weaker from up 1/10 to unchanged. Down 0.1% is the lightest month-over-month change, going back to, wow, down 1/10. We're going to have to go back a ways to the end of last year. Now, here's an interesting number. Capacity utilization, January, expecting a number of 78.8, 78.5. Which is the weakest level in almost 2.5 years. You have to go back to September of 2021. Here's the issue. Last month was honored as the worst since 2.5, since 21, but they upgraded it, which makes this month the definitive weak month. Utilization levels continue to be on the low side. And something fascinating, the Nikkei, the Japanese stock market today, closed at 38,157. If you go back to 1989, 1990, that is when the peak. So right now we're at the highest level since January of 1990. But it was December of 1989 where we made their all-time high. We're only about 750 points below that. Pay attention there. And Squawk on the Street will return after a short break.
All right. Well, there you have some more numbers on industrial production figures. That was industrial production comes in at negative 0.1. The expectation was expansion at 0.2. And yeah, that capacity utilization 78.5. So very interesting. Let's see how the market wants to reply to that. A little bit of red. Yes. So yeah, that is the weakest number. If I look at the latest, well, there is February of 22, and then before that, it would have been April of 22. So Feb of 22 or 3. Since Feb of 23 and April of 2022. Boom. All right. Let's see what some of the suits are saying. Let's find out. All right. So who are we going to look at today? So how about the good old bears over at TS Lombard? TS Lombard, they're always good to us. They've always got some real good potential bearish news to talk about. And when we pull that sucker up, we're gonna see what they've got to complain about. All right, first thing they're gonna complain about: how much stimulus is coming in 2024? Political indicators suggest increased concerns about welfare and social stability. Beijing will need more proactive fiscal, monetary, and policy states. Well, yeah. Is this just about China or everywhere? All were bearish on China. Last week, we met with more than 20 clients and prospects in the U.S. Investors raised questions on stimulus, to Taiwan, to Trump, with some interest in catching the bottom in Chinese stocks. You know, what I think is interesting is when everybody is bearish on China, isn't that the time to go long China? I don't know. That's crazy. I mean, I'm bearish China too, but now I'm like, crap. I kind of want to be a contrarian now. And they're not too into stimmies over there. Bulk of stimmy will be infrastructure in nature. Okay, this is all China. They forecast GDP at 3.4%. I think 0. I mean, this is not all going to be China. All right, what else here? Are Chinese equities near bottom? We continue to see Chinese equities as cyclically oversold, but struggle to identify a catalyst for a sustainable rally. Right. Right. Catching a falling knife is dangerous. We prefer exposure through options or high dividend paying stocks. Okay. Another 30 to 40% property contraction to go in China. RIP. Is China at risk of deflation? Yes. PPI is more concerning. Periods of low deflationary producer prices tend to hit the profits and debt service of industrial firms. Absolutely. Bipartisan, tough on China. Biden is hawkish on China. Trump term would be welcomed in Beijing because of the potential NATO drama. I made a video on Trump NATO. If you haven't gotten caught up on that, I think it's a really good summary that catches you up on all the pleasures. What if Trump wins? Will there be a new trade war? How will China respond? Inflation backdrop may limit the degree to which trade restrictions can be imposed. I don't know how important China is right now with how much weakness they have. Will China have a lost decade? Maybe. Good one. The Japanification of China. Ooh. Taiwan invasion risk. Highly unlikely. Was an interesting little China piece. Thanks, Rory. It's good, Rory. Did good. Q's still sitting around a quarter up. And BTC, same spot. Everything's about the same spot. Nothing's really moving here. All right, fine. Next one. Rabobank. Rabobank, they usually complain. They're usually pretty good complainers. Maybe because they've got too much commercial real estate exposure. So maybe it's the banking crisis. Oh, yeah, let me see what Nick T said. Oh, Nick. He finally woke up. Oh, where did he tweet? Oh, you were reading from yesterday. Forecasters who translate CPI into PCE are currently tracking the January core PCE at 0.3, which would lower the 12-month rate to 2.7. Yeah. But these figures could change after the numbers actually come out tomorrow. Duh. Oh my goodness. Overnight Fed speak pushed the market back in the dove mode. All Goolsby does is dove. I warned of this yesterday. Goolsby said all the right things to assure markets that rate cuts are still in the card. Month-over-month deviations are no big deal. And because rate cuts should be tied to confidence in being on a path towards target, even if inflation comes in a bit higher for a few months, it would still be consistent with our path to target. It's just crazy to hear the Fed say that. Oh, it's okay, even if it comes in a little, a little hotter. Did Ford just say that the build cost of Lightning is too expensive? I mean, yeah, the same is true at Rivian. Oh, when does Rivian report earnings? Rivian. Build cost of F-150 too expensive. Yep. We have to sell EVs just 3 to 5K above gas car price. Yeah, whatever. Software yields 50% margin. Well, they're trying to pull off the Tesla. Although even Tesla's having some trouble selling their FSD. Maybe because they keep punishing the people who buy it. Jerks. Rivian next reports earnings on NVIDIA Day. Ooh. Prospect of a cut in May very much hangs on inflation prints. Goolsby succeeded in calming the markets. Much will depend on the future path of inflation. I mean, this is very boring. We already know that much will depend on the future path of inflation. We already know that.
By volumes in all three of their units: production and precision equipment, small agriculture and turf business, the forestry and construction business, where they're all seeing higher prices. But the bottom line is crop prices have come down, and this is a stock and a business that largely reflects and follows that. So it's a sign that, you know, on the plus side, inflation is coming down, but also raises question about demand, right? Because Deere's always kind of an economic bellwether.
Although we take pains every time they reduce guidance, David, to say that Deere guides conservatively and has for decades. Pretty conservative.
You covered
guidance.
this company once.
Yeah, back in the day. Yeah, always.
What was the day, Carl?
That would have been early 90s, yeah. Okay. Early mid 90s.
All right.
But, you know.
Oh, yeah. After the bell today, Coinbase does have earnings. You know, I don't know how quickly their trading revenue is going to get affected by the ETFs. I can't imagine that it's very quick. So look at BTC, for example. We got ETF approval somewhere in Jan. Oh, well, these earnings are going to go through December? December or January? Let me see. Coin, investor relations. Let's find out. So Q3 ran through, oh, you losers. Just give me your filing. Why do you make it so hard? Okay. Their Q3 runs through September 30th. Okay, October, November, December. Yeah, okay. So you should not see any impact of the ETFs yet, with the exception potentially of guidance. So I think it's way too early to really see any kind of ETF impact here, which is probably good because I think the ETF impact will be negative, but they'll be asked about it. So that'll be interesting.
Is there a 1% tax on buybacks? Is that right? That hasn't stopped any of these companies, right?
And Goldman's done a nice job of charting sort of the trajectory of CapEx budgets falling while buyback budgets are rising. Is that a signal that companies are just too cautious to invest in growth right now? Is it a possibility that that's going to turn, and once they feel more confident about the economy?
Or that they're signaling to investors that they feel confident in their cash positions and in their ability to generate profit in an environment where top line has come down a little. Meta, I think, is a classic example, right, of the year of efficiency. They did it, the market rewarded it, and then they announced a cash return for the first time in the history. And I think others are following that.
Yeah, Uber's a similar story, right, with the capital returns there. A lot of positive notes last night about Uber's buyback.
Journal had a good piece about Uber and Lyft finally getting to sustainable profitability. A lot of people question whether they could make ride sharing.
Right. I mean, Uber's far, far more than Lyft. Uber's going to, potentially generate $9 billion in free cash flow by 2026, according to what the company says. Lyft is just turning it around. Maybe.
Let's get the opening bell here and the CNBC Real-Time Exchange at the big board, Palmer Square Capital, BDC celebrating a recent IPO at the NASDAQ. Immunotherapy biotech Tevagen Bio celebrating a recent listing via SPAC. As we're back to 5K on the S&P, Dow with some milder gains.
Bitcoin popping a little bit there at the start. That was a very, very green board, too. Yeah, there's Bitcoin moving up 52.5 right now. Remember, folks, the next stop for Bitcoin is 57.5. And that'll be great for Coinbase. I mean, who knows what they're going to report today, but look, BTC up, coin up. That's just the way it's been working. So, pretty simple, straightforward trade. Okay. I'm just blown away that the bottom was 118, and I sent out an alert in our Discord. I'm like, this is where my bottom target was 118, and that's where I bottomed. It was great. That was beautiful. Straight TA. TA is gorgeous sometimes. If you get it seems like in the short term, if you get too excited about the fundamentals and you miss the TA, it's an oopsie doopsies. Like, look at the trend on Super Microcomputer. It's simple. It's up. It ain't gonna last forever, But it's crazy. This thing was up like 8% yesterday. It's up another 9% today. You know what this company should do? This company should raise some cash. Oh my lord. It's crazy. Sell some stock. Enphase got some red candlesticks there at the start. Coinbase, red candlesticks at the start. Qs are trying to stay green. TSM, ASML flipping around here. That's a little boring. Where's Nvidia? Nvidia doesn't know what direction it wants to go. Come on. There is Supermicro wants to keep going up. So does Intel. That doesn't want to load. ARM. ARM's up again, another 4%. Lockups next month. Getting to a big old lockup expiration on ARM. And you have to remember, there's very little of this one outstanding. But I think that's March 13th, if I remember correctly. So check that. But I think that's your... that's it. So we'll see. Okay, so then we have New York Community Bank, couple percent. Tesla's actually trying to go up this morning. That's quite abnormal. It can't possibly be green candlesticking. The stock never goes up. This is like the dead dog. I'll just stop looking at it. CrowdStrike going down. Cloudflare going down. Palantir's trying to go up. Affirm after those retail sales figures trying to go up. See, now I think that's interesting. People are taking on more debt to sustain their spending, but there's a limit to that. How much can you really take on in terms of debt? I worry about this buy now, pay later stuff. I mean, I always figured people were going to use it, but ideally, I encourage people not to. But especially since you're seeing people pull it off on like groceries, and soon it's going to be like buy now, pay later rent. You're going to get BNPL on everything soon. Dave and Buster's. BNPL Dave and Buster's. That's funny. Wow, there goes FICO again. Yeah, FICO up another 4% today. Intuit bounces right off of that support line and keeps going. Google is what's down 2%. They're not really joining the rally here. SoFi 852. Rivian's up 2 to 3% after those Ford comments. Coinbase up 7 now. Wow. Just a wild ride. Do I know if NEO will ever bounce back? Well, the problem with NEO is your exposure to China. It's basically all China. And, a little bit of Europe. And China's just in the poops. So a bet on NEO is a bet on China, unfortunately. Broad-based cooling. Okay, we read that already. Really, that's it? No news here? How boring. Dozens of banks rapidly piled up commercial property loans? Yeah. Greater scrutiny to be considered. New York Community Bank. It's the biggest people are watching for commercial real estate exposure. Above regulatory guidance. Whatever. Okay. Good old coin earnings after the bell. What else? Fed's discount window to stop bank runs. Okay. Yeah, use that instead of the Bank Term Funding Program. Okay. Bank Term Funding Program ends about a month from now. Oh, the NASDAQ's about to go negative. Bank Term Funding Program. Bank Term Funding Program. I want to get the latest chart here. Okay, here it is. Oh, it's stable. Shocker. Oh, I think today, by the way, we get a new GDP estimate. It should come down with those real, it should come down with the retail numbers there. Yeah, next estimate's today. Those retail numbers should drag us down from 3.4%. I'd guess to like 2.9 or something like that. So, yeah, but the suits are waking up this morning, I think, realizing that lower retail sales maybe isn't a great thing for the stock market. That's why I was a little surprised the market was skyrocketing a bit in pre-market. But now,
lost the lead.
There's your Nasdaq-y dudes down 3 bips. Nvidia's down 1%. Nvidia can't break out of that resistance. I mean, I know it's sitting above it right now, but it can't pull it off. Oh, Supermicro finally U-turning down. Enphase sits at 3. Trade Desk 145. Microsoft, Apple down a little bit. Tesla's up 2%. Hey, it's the left behind bets are finally getting picked up a diddle bit today. Said a diddle because don't get your hopes up.
We got from him.
They were not great sales either, though, because the stock obviously is up nicely this year, and this took place in the fourth quarter of last year, where it was nowhere near. It was in the 90s at its
which is part of
highest.
his case, of course.
Yeah, but he sold 700,000 shares. Like, why?
Uh,
Why would you do that if you're in a proxy fight?
I don't know. 13F is a little stale too, so I wonder.
No,
We'll find out. Like we'll
It's
ask
stale,
next time.
but it's not. It's telling us he sold stock.
Right.
He was in the proxy fight. He sold stock.
Right. But the question of what does it mean for the proxy fight, that's still on. It's April 3rd, right? They're still fighting it pretty bitterly.
Absolutely.
I think.
Again, it is rare following these things to see that, unless they had redemptions that they had to sell some stock for, to me.
Could be.
Unclear, but obviously he made his case with you yesterday.
Well, and I think the takeaway was that, the market really embraced and was enthusiastic about the earnings report from Disney last week. The targets that they set out, the moves that they made, the $1.5 billion in Epic Gaming, the Taylor Swift eras. And here's Nelson Peltz of Trian's reaction to everything that was announced.
It's not that I'm not satisfied. This company sells at a multiple of their pronouncements, a very high multiple. They made these announcements like this management team just came into office about a week and a half ago. They have been here for 20 years.
This person's complaining about Disney. Don't really care. Okay. Hey, Nasdaq's positive by 0.1. Oh. All right, there's got to be more news. This is so boring. I need more news. I mean, maybe no news is good news, but give me some juice. And I don't want to talk about Israel right now. What? Putin says Russia prefers Biden over Trump? Yeah, but that's going to end up being some kind of like backhanded like Trump's too strong or whatever. Let's see. Russian President Vladimir Putin says he preferred Biden to Trump, describing the president as more experienced and predictable. Wow. Biden is a politician of old school, but added that Moscow would work with any. Yeah. Trump's a little unpredictable. Putin then described, let's see here. No, that's 2016. Believe the current policy position of the United States is misguided on Ukraine, blah, 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 blah. Yeah, interesting. But see, what's funny is that'll like end up doing the opposite. You're going to get people that are like, so he's afraid of Trump, But I think he's probably already calculated that out. Maybe he actually thinks Trump will negotiate the deal. See, like this is like the 4D chess of Putin. He'll probably think that Trump will actually negotiate a Ukraine deal and end the war faster. And so by bagging on Trump and praising Biden, people might actually vote for Trump. The reverse. I don't know. Who knows? Politics. 40% of lawyers are women. Cool. I don't know why that's on the front page of the Wall Street Journal, but okay. Whatever. So, what do we got here? Back to Dallas. Back to the dollar hollis. Look at that. Bottoming out on the Qs. Up at 433. Coinbase still sitting around 6%. I mean, nothing's really moved here. And except for Nvidia. Nvidia falling. Womp womp womp. Yeah. Embraer. We gotta get Embraer back to $20. Bought this sucker at like 12. No, was it 12 or 11? I can't remember. Anyway, Embraer's been a good little sneaky one that nobody's really been paying attention to. It's just like Dave & Buster's, though. I don't know where they just came from. Out of nowhere. Does Dave & Buster's even make money? Let's look really quick. Investor Relations, Dave & Buster's. Let's see if their numbers have gotten any better. I'll tell you, they keep raising the prices on their frickin' games. Like, you have to go on Wednesdays to get half off. Like, I get mad spending the money at Dave & Buster's because it's gotten too expensive. I used to go all the time. I also don't like driving. But anyway, that's just me complaining. So that's not a surprise. That's not new. Okay. So quarterly filings, December 5th, Dave & Buster's. Let's see what you got, Dave & Buster. Net cash provided by operating activities, down $34 million at $267 for 2023. CapEx $207. So you got $60 million cash flow, free cash flow. And entertainment revenues are down from last year. Yeah, all revenues are down like 5% from last year. Yet cost of entertainment is up, cost of food and beverage is down, payroll benefits are down, other store OPEX up a little, whatever. What's their net income? Net income. Oh my gosh, they're losing money? Are you serious? They don't even make money. How are they doing so well when they don't even make money? That doesn't even make sense. They're negative. Dave & Buster's. I mean, everybody thought for a while there they were going to go BK. I mean, that didn't happen. During COVID. Everyone shut down. It kind of sucked. And then they were going to bring radio D. Who remembers that? They were going to bring radio DJs. I'm like, oh my God, this is so stupid. They never ended up doing that. Yeah, they're expected to get back to positive EPS growth of somewhere actually around 22%. So, you know, 332 adjusted EPS divided by 60 divided by 332. At $60, this thing's trading for 18 times. It's probably trading for a one peg, honestly. It's not that bad. It's actually pretty good. Let's see here. My buddy drank a piece of glass at D&B last night. Ouch. Most hated sector out there is mining. I believe that. Who was the person? It was Druckenmiller that added to, what's it called? Druckenmiller added to Barrick. All right. 6% on coin, still running. BTC, 52.6. Enphase, 3.6. Supermicro, back at the run, 7.8. It's crazy. For server racks, it blows my mind. New York Community Bank's trying to get back to $5. That's pretty cool. All right, any major movers here? Yeah, Supermicro Computer, Lyft, Coinbase, New York Community Bank, Enphase now over 4 with Rivian over there. Well, probably just because you've got yields falling a bit here. But Google, what happened with Google? Google. It is not a server rack company. Do they not sell server racks? If they sell server racks, it's a server rack company. I know they sell switches and all the other crap as well that goes into these. The top of rack, the bottom of rack crap. I mean, products. Rack-mounted servers. They've got GPU servers, storage servers, blade servers, blah, blah, blah. Everything you need. They got it all. They got it all for your infrastructure. It's great. Yes, a lot of embedded services for these things. They sell you rack integration services. Full rack solutions will load your rack. They'll sell you the rack. They'll sell you the chassis. They'll sell you anything you need for your server, for your rack. They'll sell you. 5G equipment. What do you want? What products do you want? It's kind of cool. Liquid cooling. That's kind of cool too. Liquid cooling. Cooling systems for your server racks. Yes. Liquid cooling. Very powerful. Got to cool those H100s. Why use the stock fans when you could get liquid cooling? They do everything. Project inception, application and analysis, rack layout, proof of concept, assembly. They'll assemble your rack. They'll fill your rack. They'll deliver your rack. They'll install your rack. It, like I said, it's a server rack company. Everything's rack. So I don't know how you can say it's not a server rack company. That's what they do. But anyway, as far as Google, there's nothing. OpenAI web search takes aim. Oh, maybe it's that. Ah, maybe it's that. I bought a used Supermicro server on eBay and configured it to be a large home file storage system. See, that's actually a good idea. That's a good idea. I used one on eBay. Oh, good job. C-Dub here says they make server boards. And C-Dub, on what do you install those server boards? Anyway, OpenAI's launch of a web search product, as reported by The Information. Oh, here we go. Here we go. I want to find that. OpenAI. See, that's smart. Ah, that's why they're falling. Aha. OpenAI is developing a web search product that would bring Microsoft's backed startup into more direct competition with Google, including embedded links. Wow. Yeah, that's why Google is falling. Interesting. Regular server racks are flat. Or regular racks are flat. Server racks are stacked. Oh my god. This is such a dude chat. Alright, yeah, there's Enphase. And the rack company. You know what? They missed the opportunity. Their ticker symbol should be rack. It's available. No, it's not. Rackwise. Rackwise Inc. Who the hell is that? That's delisted. It doesn't even count. They should change their ticker as soon as possible to rack. But then again, by the time they get to that, they'll probably have to change their name to Wrecked. Oh, sorry, that's Rocket Mortgage. Oh! I gotta go. Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker. Goodbye!
Go f*** yourself. Is that clear?